Hello, everyone. Welcome back to the RationalInvestor.com's Broiler Chicken Show. Back. Somebody's got to do a montage of those. Maybe I'll volunteer Chris to put those together. All of my bucks. That'd be kind of funny to do like a harmony of all of Brian's bucks as a lead-in. Wouldn't that be hilarious? And I'll just go over the past 6-8 months and see if I went buck, at the beginning of the show. That would be funny. Anyway, all right, welcome back to the Frivolity, everyone. It is, where are we here? It is Sunday, August 7th, T-minus 1 month. Actually, look at that. 1, 2, 3, 4 weeks until TRI Portugal 2000 Nazare TRI meetup. We're not giving out the address. It's a private party. Go screw yourselves, public. Just kidding. I mean, I hope everybody's having fun with this. It's kind of funny. We've gone back and forth. Do we want to invite the public? Do we want to keep it private? Is somebody going to come and assassinate me if I give out the address to the wrong person? So we've collectively decided we're just going to keep it a private party. But of course, if you are a TRIer, if you are an alum, if you have done the education program, of course, I'd want to see you anyway. From what I understand, there's a good 30, 40 people coming to the meetup, so it should be a lot of fun. There's Chris. Chris is saying, and it just makes sense, right? If you're really interested, join the TRI site and pop in the rocket chat rooms, and you can find out all what's going on the inside. We don't need to necessarily advertise on the outside. So, point of the matter here is we're coming into the latter part of the summer, August of 2022. I'm going to say, just on a personal note, and I don't know if you are feeling this in your lives, but this year sucks horsecocks, man. I mean, it's just brutal. So, if anything, this is absolutely perfect sort of George Benner. I think that's what his name was, Benner. I think it was George Benner. Can't remember. Benner cycle said year 22-23 was going to be crappy. And, set yourself up coming outside the other side of 2023 to participate in bull markets following the event. But as some of our astrological buddies have told us, don't be surprised in the latter part of this decade, times get a little bit challenging again, especially around year 2027. So it's a bit of a slog. I mean, the good part about it is if you are a professional risk taker and you manage your behavior correctly, I think there is a bit of a profit window here. Like I noticed somebody over there on the YouTube page is posting a nice pump in Zcash. There was one name in particular I've been trying to buy in crypto, and I can't get a fill for the life of me. I don't really want to chase. You know how important it is for Brian to stick to his levels and do what he said he's going to do. So here it is, up another $2.83 today. I really like the look of this little thing here, EGLD now. So I've got my bids working. The only question is, can I get my fills? I'm not doing this over on Tether. I actually have an account over on Kraken, and I'm trying to buy it there, and it's even worse. I mean, there's my bid at the breakout level. That's the same level as the Tether. And you can see I'm not getting any help here at all, but hopefully I'll get a little bit of volatility so I can sneak my way in. The point of the matter here is this is the time of year when you're supposed to make money. Oh, good. Eddie said he got a whack of it, so that's good. Good for you. Hopefully, names like this, I mean, the irony of it all is that there's no reason why a name like this can't have like a 10x pump here through the latter part of the summer. This is venture capital. This is exactly what's supposed to happen this time of year. I do like the idea, of course, if you can, for a guy like me, you can clearly see I'm trying to get in here at around mid 60s. And what a surprise. There's Colin and his dump chaser gang sitting at the 50% rule, and he's going to be wanting to spoon feed the market because he still thinks this is a bear, but you can see him upset. There's 50% rule, WD GAM. There's also previous market structure levels. So these are key horizontal support and resistance levels. That guy there, that guy there, that guy there. So, I mean, you can see there is a very good statistical chance, for lack of a better word, that we're going to get up into those double areas. Now, this is a game of speculating. And, the issue here is not so much that you are smarter than the next guy in the market. Because frankly speaking, don't put yourself into that position. Just don't do it. Unfortunately, with a lot of young men, they constantly are doing this their whole lives. Who's the captain of the wrestling team? Who's the captain of the football squad? Who's the captain of the hockey team? And the sad thing is even girls. Hey, who's the captain of the cheerleader squad? Who's the captain of the volleyball team? Whatever. I mean, we're always being put into this competing against our peers mentality. When it comes to trading, that is completely wrong. And if anything, what I've noticed, and actually on the site of late, and I got about 3 thoughts in my head here all simultaneously. I hate when this happens. Try and get them out. So first and foremost, you are only as good of a trader and an investor based on how well you follow your plan and what you said you were going to do at the beginning of the day. Do not ever mark yourself up against some other trader in the marketplace, because you don't know what kind of experience they have in the market. You don't know what kind of capital base they're working with. You don't know if they might even be privy to insider information, and they're playing with stacked cards. So, and then what I wanted to sort of juxtapose that with is all of our students in our education program are highly, highly encouraged to get off their butts and start journaling and really, digging into your own personal psychology. And we have a number of our veterans on the site, as we've gotten these tools up and running, and I'm so proud of Stuart. He's very close to getting a spreadsheet on the dashboard as well, so we can literally log every single thing that we do in the marketplace, and we're open books, and we're not lying to anybody when we show people our logs. But the point here is that the only way you're going to get better at trading and make better investment decisions, of course, is you have to write everything that you do down, and then you have to go back and, every Saturday, for example. I mean, I had a very tough psychological week this week. I got handed some information about my son that really bothered me immensely, and it really threw my trading right off. But, even just going through the week, I'm actually very proud of myself that I finished the week actually profitable. I mean, fuck, considering the train wreck sort of fundamental news I had in my own life, I'm actually pretty pleased. But the point here is, I mean, I'm trading very, very small numbers, because I've always stressed this to people. If you can't trade small, you got no business trading big. And I just want to get back into the day trader rhythm where I'm consistently making money from trading. And so I'm just slowly building myself up. Point here is, at no given point in time whatsoever, actually, that's not what I wanted to put to, but at no given point in time whatsoever do I ever compare myself to somebody else. What I just simply say is, how am I doing on following my plan? Am I making mistakes? Am I making the same mistakes repeatedly? Am I acknowledging that I'm making those mistakes? How am I doing on process goals? Those are the kind of things that separate the wheat from the chaff in the trading game. So where was I going with all this? The irony of it all is that I actually think that there could be a bunch of money to be made here, but I'm a huge fan of trying to build that risk-free position, where if the idea goes belly up, Luna, excuse me, I've already sold 2 or 3 times on doubles, taken a bunch of money from the market, and I don't really care what happens afterward. So when it comes to a name like this, the most important thing I want to see in the marketplace is I want to see that I bought off of W's. I mean, for Pete's sake, if you actually heard me not buying W's, and you'd be like, Brian, why the hell do I even bother listening to you? You don't even do what you say you're going to do. So that's critical. And then number 2, because I'm a chicken shit by nature, and I want to make damn sure I can come back and play the game tomorrow, that selling half on a double to me is critical to get into that risk-free trade. And then whatever happens on the other side of this, so be it. Not that big of a deal. The interesting thing is, and you can look back on this chart, you can see that for quite, we had a little bit of a, hey, maybe I'm potentially getting to go here. And then that just completely fell apart there in the latter part of the spring, which actually often does happen around 420, which kind of sucks. But you can see the last time this thing W'd out in earnest, well, it produced that kind of move. Now, this obviously was in a friendly crypto market, and we're kind of in an unfriendly crypto market. Am I looking for this kind of move this go around? Yeah, maybe. Really, I don't even want to get into the position of predicting the future, but what I see here is I see W's. I see that I want to get in there and buy, and I want to see if I can get that double off, that double my purchase price, which I think is a pretty realistic shot. But that's me, and that's how I trade. And, once this fill comes in, whatever we do afterward is gravy. And sometimes I've ridden these things up, and, of course, selling halves on doubles the whole way up kind of idea. And then whatever I've got left, I've literally ridden it all the way right back down because it's just a fraction of what I originally bought. Would I have made more money had I somehow had some crystal ball where I could buy here and I sold the whole damn thing up here? Maybe. But that's a really, really tough business to get into, calling bottoms and tops on markets. I'm not very good at it, to be perfectly honest with you. What I am good at is just simply saying, look, this is my plan. I've been at this game for 30, 35 years. When an asset doubles in price, I just have a knee-jerk reaction that outgoes half of whatever I still have left on the books. And as I said to start off with, I'm only as good as an investor as how well I follow my plan. So there's my plan. And I guess really the most important message out of all of this is that we haven't been in this kind of market where you actually see these kind of W's happening. I think there was another one that came in that you guys are all interested in. 1 inch, I think, is another one. Although I'm not quite sure where the heck to look at this one. I can't remember how I got the chart. Or maybe I have to go 1 inch. I'm not really that good at this stuff, sorry. Is that it? 1 inch? I don't remember how I did this. Chris, can you remember what the symbol is that I have to do here for this 1 inch? I even tweeted it out too, so it should be. Okay, well, let's go to the Twitter feed. When all else fails, no space. Oh, that's what I'm missing. Oh, there you go. Yeah, look at them all. Hey, there you go. So, there's another one. The point of the matter here is, ironically enough, if you're going to act in the marketplace, now's the time to act. This reminds me of this image right here. Reminds me of I don't know how you read this line. In fact, frankly, I can't tell you how to read this line. There are 2 very unique ways to read this line. Both of them are absolutely correct. So what I would simply say is, for a guy like me, I got to say that when I look at a chart like this, that's what I see. But you may not have seen that. You may have looked at that and it might have said to you, and keep in mind, like I said, there's no right or wrong way to read this. It's all just personal perspective. But that you could have very easily read that. So what I would just simply say is if you are here to make money from trading, well, pay attention now, please. This is everything that we look for in price action. And the interesting thing is do you think there are many people in the marketplace right now going, don't worry about technical analysis, on looking at this and saying, just buy, use my referral code, of course, so I can buy another gold watch? Don't you think actually that's the smarter thing to be saying right now than when it's up here? Don't worry about technical analysis. Use my referral code and buy new highs. Oh my goodness, you got to be crazy. Because then, of course, that sets up that mess. Boom. So ironically enough, if those guys actually were half decent at their craft, they should be coming in and saying, disregard what you're hearing. Just get in there and buy and use my referral code and you'll make lots of money. I did. Doesn't that seem kind of funny? It seems funny to me. But I would actually look at that and go, gee whiz, that's a risk that I'd be willing to take in the marketplace. And like I said, with the other one, and what's interesting is you guys are all talking about these ones too. So that in essence also tells me too that these things have got your interest. So put the two together, and I mean, ironically enough, if the public looked at this image right now, would the public be really that interested? And the irony of it all is I would argue that no. If the public looked at this image, I pretty much guarantee you opportunity is, I would be willing to bet dollars to donuts, and I'd almost be willing to do this as a psychological test. Just go and do the one line and go down into the street and just ask people, because their subconscious will pick up this image, and their subconscious will actually go, "Ooh, that looks horrible." And then you just have them just read this line, and it's more like your subconscious is really picking up the nowhere, even though it looks like this, and it could be interpreted either way. But the public will look at that and go, "Oh my God, that's an absolute disaster," especially, right? If I just get rid of everything and I just say, "Well, what do you think about investing in a name like that?" I would be willing to bet 9 people out of 10 would look at that and go, "No, not interested." The 10th person I'd say, "Did you take my course? You listen to any of my videos online?" To be like, "Yes, Brian." So go figure. What the hell does that say? Do you dig down on lower time frames for entries or at daily W's? That really all depends on my trading plan. Hermes AFT trade. I totally butchered your name, didn't I? Sorry. If I see an image like this, and most importantly, and it doesn't even really matter what market it is, but if I see an image, more importantly, I pull it up and I do my fun little Fibonacci study, which is just nothing more than statistics. And I just simply ask, are we at or below reload zones? Then that actually, and in this particular case, the answer is yes. This opens up a whole bunch of opportunities. So if we were sitting up here, you can clearly see there's enough volatility that you could make some money trading this thing off a lower time frame. So, the way that we teach it in the education program is there's actually, in my eyes, there's 4 different market participants. There's the derivatives trader, and they're just crackheads. Then there's your margin trader, and 9 times out of 10, most sort of like bigger fish consider themselves margin traders. Not a lot of people are derivatives traders. Then as we move down the food chain, then there's guys who I like to call Joe Sixpack, who are basically your investors. And they're usually willing to risk like 50% of their capital on an idea. And then at the very bottom of the risk taker spectrum, we have our little old ladies, and they don't like to take much risk at all. So when we're up in here, little old ladies, no, you're not even allowed to look at something like that. Forget it. It's just not part of the question. But if you were in here and you were like, well, Brian, I'm swing trading this. Maybe I'm a margin trader. I'm trading on Binance, what is it, like 3 times leverage margin, 5x, whatever. Okay, maybe you see some sort of situation against a bunch of these lows. So then you'll drill down to like a lower time frame chart. And then you're going to be hunting, wherever the hell that is, some sort of setups. Where are you? Oh, geez. How far back was this? The chart might not even go that far back. Ah, fudge. All right, well, let's go. Maybe 27-minute chart. Are you on here, TradingView? So in that case, as we said, little old ladies, they got no business participating up here above Mountain Man. But, like your leverage trader over there on Binance, I mean, could you hunt this particular W right here? You see, down, up, down, and you even get a W within a W. Can you see that? There's like 2 W's here. So could a margin trader that's trading on a little bit more leverage, a little bit higher risk, Octane, could they entertain trading that lower time frame setup? Absolutely. Little old ladies? No, I don't think that's a good idea. So I don't know whether that helps answer that question. To be perfectly honest with you, that's a pretty sick-ass trade right there. As you notice that the market came right down against these lows, put in like a double bottom within a double bottom, and produced a pretty good rally that actually probably bought a lot of hookers and below. So it's really a function of what's your trading plan? Have you clearly identified what type of investor you are? What time frames do you participate off of? What type of risk taker you are? That dictates how your question is answered. Hermes? So we'll just call you Hermes. Does that work? So I hope that helps answer that question, Hermes. The fact that, I mean, you can see with Mr. Margin Trader, now that we're below the reload zones on higher time frame charts, right? I mean, we're way below it now. Look at, we're a million miles below it. Would a day trader, or even a swing trader for that matter, would they be interested in this W down here? Right, we'll do a rally peak up there, kind of like what we just did there a minute ago. It's almost the same chart, really. And then we'll flip this around. So lower time frame players, are we in acceptable trade location? I'm not a little old lady. I'm actually a margin trader. And I'm going to strap this thing on, maybe like 5x, 10x leverage, something like that. Is that a perfectly valid setup? You bet. So, the irony of it all is the margin trader could be zipping in and out all over the place. But little old ladies and, people that take a little less risk, like Joe Sixpack, I wouldn't really want Joe Sixpack coming in here at $270 because Joe Sixpack, if you understand our risk management model, he actually gets stopped out at a 50% loss. So you can see if Joe Sixpack came in here at $275, well, sorry, Joe, you're gone. And you can see that's probably exactly what that move was this was the liquidity event to flush Joe out of there. So I don't know. Does that help answer your question? Give me some feedback as to whether I answered that or not. BB, don't you expect one more dump? Maybe it's time to scale DCA with little old lady style. Absolutely. What I kind of started the conversation off with is, I guess the way I would look at this kind of name here, I mean, I don't know what the fundamentals are on EGLD that well, I'll be honest with you. As a trader, I start to see, I am willing to pick up anything in the marketplace at an 80 to 90% discount of its trading range. I mean, almost anything I'm willing to go in and do a nanny nibble little old lady. That's like shooting fish in a barrel. The only question ultimately with this kind of purchase here is, do you have like some sort of time window? Is the clock ticking? And obviously with margin traders, anybody who's borrowing the asset, if you're trading this with an option or a warrant or something, even futures contracts, they expire. So that means the clock is always ticking. But for somebody like a little old lady here, where they can just go pick some of this up, throw it in their portfolio, and there's no clock ticking, they just have their money working in the marketplace, this is an absolute no-brainer trade as far as I'm concerned for little old ladies. In fact, Joe Sixpacks, if you come in here and buy it 60, 65 bucks, then your uncle point is basically 30. So in essence, what you're saying is, as a Joe Sixpack, I'm going to buy that W, and I'm just going to risk to a break of the W. Nothing wrong with that at all. So here, because we are at or below reload zones, little old ladies can participate, Joe Sixpacks can participate, margin traders can participate, and hell, I don't think there is, but if like Deribit or something like that had options on this thing, I would even consider this a TRI secret options formula trade, potentially. And if you don't know what that is, take our education program and we'll teach you how to become a derivatives trader. That's this guy way up here. And really, to be perfectly honest with you, if 90% of the public loses money trading derivatives or trading the market, right? Because keep in mind, most of the public, they get their asses handed to them when they invest. So if 90% of the public can't do this just off of like little old lady Joe Sixpack stuff, what do you think the percentages of the people that try their hand trading derivatives are? I can tell you, it's like 90% of the people that try to trade derivatives, they lose money. So that's like 90% of 90%, because only about 5 to 10% of the marketplace can even wrap their head around trading derivatives. Right? So not a lot of people make money trading derivatives. Anyway, blah, 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 blah. So I hope that helps answer your question. The point of the matter here is, I don't care who you are. You could be a little old lady. You could be a Joe Sixpack. You could be a margin trader. You could be a derivatives trader. Everybody gets a big check mark in this kind of market state. That is a risk that's worth taking as far as I'm concerned. Now, remember, I said, as far as I'm concerned, everybody, let's all just call a spade a spade. There's no guarantees in this investing game. That's why we have to figure out what type of risk taker you are. And if you say to me right to my face, Brian, I am a chicken shit, I do not like risk, it makes me stay up at night, then that means you are not this person. Put those notions of trading derivatives away. You're not even a margin trader. Put that shit away. Maybe you could be Joe Sixpack, but I might call you and say, look at this thing crapped out, we got to walk away. Okay. Can you do that? If you can't, put that shit away. And really, that's why we have the little old lady approach. Because little old ladies, they risk less than 5% of what they got to work with on any one particular name. So that means they could go buy 20 different names. And if any one of those names just poof, disappeared off the board, Luna, excuse me, well, they're not wiped out. So we're going to have to figure out what type of risk taker you are to actually figure out where you participate on this chart too. So keep that in mind as well. Wow, that sure was a mouthful, eh? I'm not quite sure how I started off down that bed. One thing I will say, you want to make your life a lot easier, man. This technical analysis engine that we have built here. I mean, I love the. Keep in mind, I'm a futures trader by trade. I love trading futures, so I'm in there every single day, Monday to Friday, in our futures room, just trading away, doing our thing. And my most imperative goal is I want to, number one, be a profitable trader and demonstrate it to you. And number two is, of course, I want to be a demonstrator of best practices. So that means if I fuck up, then I have to admit it. If I have a bad emotional experience, I have to write it out and I have to journal it out. And, you know, I'm an open book. That's my promise to all of you. That was my promise to JoJo. Was I told Chris this earlier. The past 8 years, I've lived my entire life trying to make a positive difference through all of this. I've said this to you guys before, and it sometimes brings tears to my eyes. There's not a hell of a lot that I can offer that makes me any better or worse than anybody else on this planet. You all know, of course, my family situation. If you don't know my story, maybe get to know it, and you'll maybe think twice about being so critical of Brian. But if it's one thing I absolutely am committed to through this whole experience, is I'm trying to make a positive difference in all of this. We've had some great fun in the market. If you demonstrate best practices, you can take very small amounts of money and crank them up into quite large amounts of money. And we do it on a fairly regular basis. Every one of these crypto cycles, we've taken like literally no money and turned it into the first cycle, the better part of $1 million. This last cycle into well over $1 million. And unfortunately, life unfortunately throws you some curveballs. And I wasn't managing the Luna experience, but we all know how Luna went. If anything, it's a great education as to why Brian has his 2 rules of investing. And I hope my business partners have learned a little bit from that experience, because that happens all the time. Luna stories happen all the time in the marketplace, folks. You might have the most beautiful technology. You might have the most beautiful people. You might have the most beautiful intentions. And some dickhead that's on Wall Street that basically wants to pay for another jet, he might come after you. And he might say, you know what? I think I found a hole in your plan, and I'm going to exploit it, and I'm going to try and put you out of business. That happens all the time in this game of speculating. In fact, actually, I even personally had an idea last fall, a little pharmaceutical stock that I thought was a half decent idea, but it turns out the insiders were crooks, and the stock basically has gone off the board. So trust me, it happens all the time. And this is why it's critical that you figure out what type of risk taker you are and you act appropriately in the market. But what I wanted to say to you guys originally was I'm just so over the top pleased with this engine that we built. Because for the longest time, TRI was nothing more than just Brian, blah, blah, blah. Well, let's hear what Brian's got to say. And, he was a prop trader and he was a broker and he's made a bit of money. And yeah, it's great watching him do his thing. But I haven't got a fucking clue. It's just his opinion, right? And of course, we built the education program based on my 30 years experience. So a lot of the tools that I teach in the education program are very Brian. Things like the Willie indicator. You're not going to find that anywhere else. I can absolutely tell you that. And actually, I spent a very, very long period of time in my life building out this concept called the Delacour Index, which is nothing more than an amalgamation of 45 different technical indicators. 45 technical indicators. God damn. And then on top of that, I use the Delacour Index, and this just happens to be the utility sector, right? You can see it's actually a pretty strong looking market there. On top of that, then we compare how this asset looks to the rest of its peers. And then we gauge it. We use things like bullish percentage index to sort of get an idea of the broader market and how a whole sectors are feeling technically. And that's this concept of breadth. And I'll tell you, man, this is, whether it be the raw breadth data or the histogram representation of the data set, this, or, you know, our leaderboard. So at any given point in time, you can see who's strongest and who's weakest in the marketplace. This is edge. This is the kind of thing that you can't find anywhere else, and it just gives us an unfair advantage over the public. So what's super cool about this is you guys all got warning signs. Gee whiz, now, God, what is the date here? It's the 7th. So we all got warning signs in crypto back sort of the middle to the latter part of July that, hey, you probably ought to just cool your jets. And sure enough, I got to say that that's been pretty spot on. I mean, the edge is doing its edge. It's doing exactly what it's supposed to do. I got to find the chart here, right? And this is the really cool part of this is, you know, there's our breadth indicator. And all we're going to do is we're just going to follow the breadth. And then we're just going to trade the setups that I teach all you guys off of the breadth. You can think of the breadth indicator as Brian's second rule or second criteria of a good trade idea. First, of course, we want trade location. In this particular case, you can see this is what I call a bot setup. It's really nothing more than just a bastardization of the AB equals CD harmonic concept. The funny thing is with harmonic traders, though, they hate you when you take trades here. This is called the PRZ, the potential reversal zone. This is where harmonic traders want to trade. I take their pattern and I break it apart, and it produces a nice $3 of potential reward for $1 risk taken if we do actually play this pattern out. Then, of course, you know, Brian, he loves all his higher lows and higher highs. So now you can start to see 1 low, 2 lows, 3 lows. You can even start to see how the market itself is literally setting this trade up. Hopefully you all look at this and go, well, Brian, that looks nothing more than just an inverted head and shoulders pattern. I've heard of those YouTube influencers. They talk about those things all the time. So hopefully you see something along those lines. Right, come on, you. Right, there's the head and shoulders. Interestingly enough, your technical target here should be you take the distance from the bottom of the head to the top of the neckline and then project that. And what a surprise. What do you think the odds are that if we do that measurement, that's going to tell us that price wants to go to this 2.618 level? I bet it's pretty damn good. Let's see what happens. And I always love doing this with you YouTube people, because people are like, damn, that's impressive. And he didn't charge me anything to demonstrate that. Look at that. I mean, gee whiz. So, you know, is this sort of like, does the dog wag the tail, or does the tail wag the dog? Who's driving the bus here? Is Mr. Head and Shoulders, I'm a fractal bottom? Is he driving the bus? Or is it Mr. Foggenbaum and his chaos theory? Is he driving the bus? Or is it the harmonic people that are driving the bus? And the interesting thing is if you believe in trendline analysis, we probably are going to come up and kiss the underside of that trend line. That's probably what's going to happen. Now, somebody mark my words. So notice that all through this, crappy, especially since here, right? This was July 30th, so that was like right here. You saw the breadth indicator break here, and we've been basically told don't do anything. The market starts firming up. Notice the breadth turned back positive here. If we get any kind of bullish resolution here, the market's telling you this is a go. So isn't that kind of cool? I tell you, man, the tools that we have built at TRI, they're all about edge. And I'll tell you, this just looks absolutely beautiful to me. Now, the problem here, of course, is that this is for trading purposes. We might add in a long-term component, something like maybe a 200-period moving average or something off of this to help us sort of time longer-term trades. The way that I would interpret this, the way the tool is built right now, is think of this more as like a swing trader tool. That's probably the best way to think about this. And again, this sort of speaks to, is this like a little old lady kind of trade? At $22,000, $23,000, it's a bit expensive, you know, to be perfectly honest with you. How about Joe Sixpack? Would it be realistic for Joe Sixpack to like trade a double bottom off of that level there? Actually, you can see like little old ladies, if we draw out our levels here, give me a second. And that's like, you know, what's fascinating is, to be perfectly honest with all of you, I've had an absolutely horrible weekend. Just absolutely gut-wrenching. It's not fair how bad this fucking world treats you. And there's nothing I can do about this. This is the worst part about this. There's not a fucking thing I can do about it. But I will say, and hopefully you've heard just over the past few minutes, and this is probably a big reason why I do this, is maybe you can hear in my voice how this is an escape for me. This is a way where I can for a very little while I can leave the nightmare that's my life, and I can just go disappear into YouTube land and into trader land and into education land and into PMA land and just try to be like a positive influence in your life. And you guys don't hear anything about the nightmare that I'm going through with my son right now. So, okay, let's get back to the story so we can have more fun. And the thing is I leave this call and I go straight into his world right after this. So trust me, I got like 6 hours of a very challenging world ahead of me. So let's enjoy this little window that I have. So give me a second. I gotta blow my nose. All right. So PMA, karma, let's try and make a positive difference in your guys' life. And maybe if we're lucky, good Lord will help cut me a break. All right. So first and foremost, we were saying there just a moment ago, is this like little old lady kind of investing territory? Actually, the interesting thing is there is our reload zone off of this recent range. I think I might, I think I would prefer to actually do this off of the zero line. Mr. Gann actually, he suggested, especially if you're trying to figure out where prices are going to correct if we go into recession, which I think clearly we are. He would suggest that you use the zero line. You want to see something really cool. So this is, and half of the reason why I'm so, feeling so sorry for myself is, of course, my country is an absolute fucking train wreck right now. The people that are in control of it have no clue of what to do, and they're just making the situation worse by the day. And of course, my son is heavily dependent on the medical system, so you can put the pieces together. You can understand why I'm stressed. But, here's a really good application of that concept is if we look at Canada. Oh, fuck, what a nightmare. So here is Mr. Gann's thinking in glorious Technicolor. He would basically say that if you're going into a recession, then you probably just want to take whatever the high of the market is and cut it in half. Just 50% rule right out of the gate. So if you do that to Canada since 2000, this was the dot-com blow up, and notice 50% correction from the peak. oh, look where we stopped. Isn't that kind of cool? Isn't this is the escape that I'm talking about, that when I do this kind of stuff, we don't have to think about how shitty our life is. And you just go, wow, that is neat. Awesome. All right, so let's take the next one, the great financial crisis, which of course is nothing more than the great bank bailout. That's really what we should call this. But notice the peak and notice where the market stopped. Are you guys seeing this? Is anybody seeing this? Hello? Come in Tokyo? So the question is, are we likely to be heading into a recession now? And keep in mind, folks, this year 2000 to 2017 and a half, and I'd say 2017 and 3/4, this was actually the friendly part for the Canadian market. We are now actually officially into a very unfriendly market now for a country like Canada for the next, literally, it's 17 and a half years following 17 3/4 here. So literally for the next 15 years following this event, life in Canada gets worse, not better. And, you know, you look at this and you go, well, Brian, what the fuck? I mean, stock prices are at all-time highs. Am I going to subscribe to your newsletter? You don't know what you're talking about. And the irony of it all, right, is if we actually show you in real dollar terms, you tell me whether Canada is actually at new all-time highs or not. Because keep in mind, all these M2 money supplies, all of this, it's all based on the fiat currency system. So there, geez, look at this. I mean, geez, look how bad it is. Canada, actually, for the past 20 years, this was supposed to be the good cycle for Canada. Oh my God. And that's what your chart looks like in the good cycle? What the hell is this going to look like when Canada has to go through a bad cycle, which we just started? And the irony of it all is you can actually see it, right? According to my teachings, the last, the greed cycle, actually a fear cycle, beg your pardon, it ended right there. So can you all see this market structure top? I mean, the irony of it all is that, you know, all through the fucking Trudeau communism and all that kind of shit, and, you know, people getting free money and, you know, we're going to lock, and what a fucking hypocrite. I mean, Jesus, this guy's terrible. I don't know whether you saw on my Twitter feed, but I mean, it's like to the point where if you break the law and don't wear things like a mask on an airplane, you can literally be sent to a concentration camp. But here's Mr. Trudeau with his whole family vacation, and watch his daughter. The hilarious thing is his daughter's like sneezing and coughing the whole freaking time that someone took this video. I mean, and I don't see a single mask on any of these people's faces. So it's stunning what's happening to this country called Canada. It is absolutely stunning. I don't get it. But anyway, you look at the country of Canada and you tell me this was supposed to be a Canada-friendly cycle from the start of 2000 all the way to the end of 2017. How did Canada actually do in reality? And is there a chart pattern here that's forming that should be a little bit concerning to the average Canadian? Do you see that image? Oh, God. It's awful. Absolutely awful. So, the issue here in Canada is grave. It really is. And the sad part about it is I can actually see it in the socialist system right now. And like I said earlier, things are going to be very, very difficult for a country like Canada over the next 10, 15 years. So much, and I guess, it wouldn't be so bad if the Trudeau guy was following the same rules. If he went out to the truckers and literally went out into the streets of Ottawa and said to them, met with them publicly and said, I'm your leader. I'm here to help. What can I do to help? This is my job. Yes, somebody might take a poke at him, but that's your job as a leader, is you have to step into the breach when everything looks terrible. And instead, what did the guy do? He actually fucking took off and took off out of the city and, sent in squads of police and stuff to break up the protesters. Terrible leadership. Terrible leadership. So frankly speaking, I can understand why the world is a bit skeptical of Canada right now. It's dicey. And what's interesting is if you go on social media and stuff, man, there are a lot of people going, woo, do you see what's going on in Canada right now? Ay, caramba. Anyway. Okay, so I'm not quite sure how I got off on that, but maybe that gives you a little bit of backstory about why I'm so upset right now. I'm pretty upset. Super, super cool anecdote of us using our trading tools to outperform and building edge. And frankly speaking, just as I showed you with a couple of these altcoins, like this little EGLD, I actually think it's like the broader market is dragging the market higher. And that's exactly what's supposed to happen, right? If we follow the breadth indicator, and this is the whole point of the breadth is, and let me ask you a question. This would be a really interesting question for you. Do you trade the stock market or do you trade a market of stocks? Somebody who trades the stock market is somebody who buys the Dow Jones Industrial Average, or maybe the spiders, right? And I invest in the stock market. Do you invest in a market of stocks? Well, I buy Apple, I buy Microsoft, I buy this tech stock, I buy Tesla, I buy General Motors, right? That kind of stuff. Same logic applies in crypto. Exactly the same logic. Oh, and by the way, if you can put up with my crazy antics and you're actually finding some value in this, can you please all hit the like button, subscribe, ring the bell. Let's get this Google algorithm up. I'll try and swear as little as possible. And maybe that's how we solve Liam's problem. We got it. Unfortunately, I have to be less free and more shilly with you guys. So at the very least, can you hit the like button, subscribe, ring our bell, all that kind of stuff. So maybe Google will think more kindly of us. And of course, thank you very much, Nick. I really appreciate it. Chris, if you can keep looking into how we monetize this YouTube station, maybe we're at the point where Brian can somehow control his potty mouth and we can actually try and ramp up subscribers. And like I said, maybe that's a way we can actually, we can maybe privately fund Liam's care. I don't know. Got to figure something out. Anyway, so back to our conversation here. If you look at this image, what I kind of see here is, the altcoins and the lower sort of cap market has been kind of left behind. And I will say this, I see a lot of people, on the YouTube page, and I talk to a lot of people on the site and in the, school programs and stuff, and it makes perfect sense. Is this the beginning of a new bull market? Or is this maybe what they call a dead cat bounce? Or, as somebody there over there on YouTube page just said, exit pumps. I could definitely see the latter, not the former. If we just use this image, for example, and we'll get rid of all our traders here. I always ask people, and let's see, DMAC, what's the definition of a new bull market? What is the number one thing that I tell all new students that this is what you must see to believe this is a new bull market? Let's say I'll try and shut up for like 20 seconds, and let's see if you guys, any of you, can actually answer the question. I think DMAC, you know the answer. Zany YouTube thumbnails, that's the hallmark of a new bull market. Julian, is that our Julian, or is that a different Julian? Nailed it, Julian. Way to go. What I want to see, one thing and one thing only. I want to see weekly W's. And do you see the weekly W here? And woohoo! That's quite a run. What do you have happening here? How do we say this? Does every bear market look exactly the same? I would actually say no. Higher highs and higher lows, exactly for us. But the key here is I want to see it off of a weekly basis. Weekly W's. I try and keep the message as simple as possible with every new person to investing. And whenever we go through these bear slides, I'm always asking that question. Weekly W's. Can you show me a weekly W? I got to say, folks, I mean, as a guy who's been playing this game 35 years, that's not bad. We could have a lot worse looking situations here. My fear here is that this thing is going to pop, and it might pop hard, right? As we did the analysis off the daily chart. And, you know, if you just think WD GAN, well, there's 50% roll. Look at all these bulls up here that are trapped, and they would love to be able to get out of those trades. So I guess the way I would look at this is this thing is damn cheap. If you can come in, because there are weekly W's, if you can come in as a little old lady and just nibble away, that's not a bad idea at all. And the irony of it all is that usually when these things are actually half decent ideas, it's almost impossible for me to convince you to buy stuff. That makes sense. Makes perfect sense. Is there a guarantee that this trade's going to work? Of course not. I mean, that's the whole point of what we're doing. Is we're taking a risk. Just out of curiosity. And really what we like to do, and the way that I would measure this, is what's the statistical odds that this W translates into a 2-to-1 risk reward ratio here? So there to there, and where's our 2-to-1? I'd just be curious, can anybody sort of help me out here about what are the statistical odds? And this makes perfect sense because that's clearly a major pivot point in the marketplace. And I'd also say probably too that this is probably like 38.2 kind of FIP. So if we go there to there and we go there, wow, 38.2 is way up there. Oh, wow. Maybe we go there. Hey, that makes more sense. So looking at this range, what have I told you guys? What's the statistical odds of us getting up into this level here? Which I think I feel very comfortable saying here. So what do you think the statistical odds are here? Well, I mean, give me a statistic. Nah, I wouldn't say that high, but that's okay. I like the fact that you're participating. That always puts a smile on my face. I'd say a good, 60, 70%. Does anybody know? I'd just be curious on YouTube. What is the statistical probability that I want you to try and shoot for if you're actually taking setups in the market with a totally straight face? When I used to say this to the guys on the CME who are just pit traders and they just trade the opening range and shit, And it was funny because I think it was Chris who was telling me he was sitting there with John Hoagland and they were just fucking shooting from the hip. They weren't trading setups. They didn't have any discipline. They were just sort of like, man, you want to take a trade here? All right, fine. Let's see what happens. Let's go for it. So I'm not necessarily guaranteeing anything when I talk to you. But the statistical odds of something like this thing working its way up to 38.2 before it breaks this low, I think are easily a good 60 to 70%. Now, is that a world that we as professional traders can operate in and make a living on? Just out of curiosity, and what a coincidence, do you see how this is almost basically a double? I mean, why don't we just put it right to a double level? Okay, well, now we're basically talking a tag at 38.2. What did I say was if I adhere strictly to requiring that I don't take profits on a trade until I hit that 2-to-1 profit objective based on the amount of risk that's clearly identified what I'm going to have to take. How often do I actually have to be right, quote unquote, this level gets traded to just to be a scratch trader? Not make money, not lose money, just a scratch trader. I'm learning, I'm getting better at this. 33% of the time. You can see Adam already knew what was I about to say. That may not seem like an important statistic, but it is critical to this game. What did I say I thought based on my professional experience? What did I say I thought was the probability that we were going to trade to this level? I said about 60 to 70%. And yet, if I just want to keep working away and staying alive in this business, because keep in mind, and I tell my business partners this all the time. But when I was a broker, basically I was running a small business. I mean, basically I was technically nothing more than a glorified used car salesman. I mean, that's what all stockbrokers are. What is the way that most businesses actually go out of business? It's not because they don't have good ideas. It's not because maybe they don't have good clients. It's because they spend themselves out of business. So here is a way where you know that if you're right only 33% of the time, that you're not going to go out of business. You'll just be a scratch trader and just sort of bumping along. I love Joshua. Joshua, he's the type of guy that would say, let's give some PMA to these government people because, hey, they deserve a bit of PMA too. I love that about you, Joshua. You're the best. I tell them all to go to hell. But anyway, so back to my story here. Here's a way that I actually have a realistic expectation of 60 to 70% of the time, but I only need it to work 33% of the time just to keep the lights on. So this is what you want to do in business. I can't stress that enough. Now, this is to the person's point earlier. Could this rally up into 38.2s? And we know that we should expect a 38.2 bounce regardless of whether this is a bull or bear, because this is what the market likes to do to ask whether it's still a bull or bear. Notice, what do you think the statistical bounce number was on this rally from here to here based on that range? Can you see how that looks like to be about 38.2? So it's not really, look at that. You see that? So it's not really like I'm saying this is a new bull market. To be perfectly honest with you, this could very easily be a dead cat bounce, exactly what you said, exit pump. All of the insiders are going to use this rally to shill all their coins to the public, and they're going to get the hump out of here into September, October before we get ready for our next leg down. I could totally see that. That wouldn't surprise me one bit. So to the person who said, oh yeah, these are all exit pumps, you might be right. You absolutely might be right. What I'm just going to simply say is it realistic to see whether I can sneak my way in off of this W, which I know usually hold about 60 to 70% of the time. And I'm going to use things like 38.2 tests of previous horizontal support and resistance. You can use the same logic here. This was obviously a key horizontal support and resistance. This rally was a test of that level. Could we see the same thing here? Absolutely. Why not? Not really out of the ordinary. And seasonally, this is exactly when this stuff is supposed to happen. Now, somebody's going, but what about the fundamentals? This thing sucks horse bleeps. I'm not going to talk fundamentals here today. If this thing doesn't match your fundamental sniff test, too many coins out, don't know where the insiders are long, don't understand what the value of one of these things is, don't understand how they actually validate their network. If it's POW, what's the cost to actually validate the network? And so the miners themselves who validate the network have some sort of metric that they need to see the price above, i.e. cost of production, value. POS, I haven't yet figured out, I haven't talked to anybody who can actually say, oh, POS coins, this is the way that you figure out value for one coin. I haven't seen anybody. And frankly speaking, the way these things have moved up and down, you know, really, I don't know whether anybody else has figured out if there's fundamental value or not. If it goes to zero, it means there's no fundamentals. But what I want to ask you here more a question of, I mean, as we said before, the leverage trader, could a leverage trader, and I already see the trade here, could a leverage trader sneak their way in off of, actually, there's the double top there, right? Give me a W on the other side of this trend line, break. Oh, hello. Could you not have bought this W right here? Risk to a break of that low right there. 2-to-1 risk reward. Just basically on a test of the previous high. Out goes half. You got your stop at scratch on the remaining. And who knows where the hell this thing goes. Ironically enough, the higher time frame chart, that's exactly the same conversation. It's just this is off a lower time frame chart. And that's exactly how all this shit works. The universe is extremely fractal. So if anything, that's the number one reason why about 6-8 months ago, I actually switched to Tesla time frame charts. So since everything is a fractal, I want everything to be geometrically proportionate as we move our way up the time scale. So there's no reason why this kind of setup can't work off a daily chart, which would appeal more to like sort of little old ladies and investors. But the trader, you see there is the trade. So in this particular case, I would probably frame this as like a bot setup. And I would say something like, all right, there's our base. We'll work off of that W. We'll then go bot setup. Boom. Do I have 33 to 66? There is 33. And then, you know, I love juxtaposing the LJ setup, which is our trend line break setup. We could call it RJ now. I don't think the person who wanted us to call it LJ is even watching these videos anymore. Maybe she is. Who knows? But anyway, point of the matter is Could definitely use, come on. Hate when I can't. There we go. I'm gonna get rid of that one. There we go. All right. So, if I was trading this off a lower time frame, right, you can see the setup. It's not rocket science. Getting the chart to cooperate, that's the rocket science part of this. All right, there we go. So I'm just going to take my study and I'm going to replicate it. And I'm going to throw it on here. We did 33. We have one low. We have two lows. We've broken a trend line. We have a nice W forming. That's a nice buy signal. This is what I would call front running my bot setup. And front running the bot setup, there's the bot entry trade. There's move stop to scratch. There's move stop to trailing. So at this point, here's your ultimate target. So at this point, you're long from here, and you're looking at a potential let's risk against that low, since that is the bottom. What is that? 6-to-1 risk reward. Now that's a badass trader. So, could this just be working away? And like I said, you sold a little bit at 2-to-1. Move your stop to scratch. You could approach that. You could say, hey, Brian, I'm just going to play this bot. I'm front running the bot. I've already had move stop to scratch. So I'm going to move my stop to scratch here. And I'm just going to wait for either this level or this level to trade to. And whatever happens, happens. Fine. And the irony of it all is that this is off of like a half-hour chart I showed you earlier. This is basically the same conversation as what's going on here. This is now off a 4-hour chart, but it's the same logic. No different. Trend line break. Show me a W on the other side trend line. Do I have one low, two lows, three lows? There's the bot entry level. Place a buy on stop order if you want on a break above that high. Nothing wrong with that at all. Do we have indicator confirmation from the breadth indicator saying that, yeah, it's okay to start hunting longs and get long? Well, looks to me like everything's lining up here. Is there a guarantee that this trade will work? Absolutely not. No guarantees whatsoever. What did I say was the statistical probability that W's in markets are going to move that 2-to-1 risk reward? Usually they're good, let's call it, 60, 70%. I can live with those kind of numbers, but that does mean I'm going to get stopped out 30, 40% of the time. All right, so there's sort of my overall view of the market. Hope you guys enjoyed that rant. Kind of funny, I came in and bought a whack of this Ethereum down here at $1,000, and it's just been slowly working its way. When I originally did this, I said we were going to use the 38.2 as our price objective, and of course that will be well over a double. I'd actually prefer to shoot for these 4669s. That's our Eddie, you're long from 1,009. Nice trade. Just as I said before, M's and W's, what's the statistical odds of this W actually producing a 2-to-1 risk reward? I'd say about 60, 70%. It's the same old, same old. And of course, the good part about this one is you got a nice, really, really simple profit objective that's like 1,000,000 miles higher. What did I say out of the gate? Let's see if you guys can jump through the hurdle. What did I say is our natural price objective that we should use if we're ever thinking about entering a market? All right, thank you, Matador. All right, so it's the #1 rule I learned when I first started in this business, like 30 years ago, 50% rule. From that high down to that low, you can see where the 50% rule is. There it is, $2,800. So is it in my best interest to actually step in front of this trade and start going, well, I think this is going to happen. I think that's going to happen. Believe it or not, no, it's not in my best interest. What's in my best interest, now this one, now, you know what? I'm just going to leave it. I'm going to say I like this trade so much because I was able to sneak my way in below 78.6. So remember, little old ladies. And remember, I'm dealing with a bit of money here. So, throwing 5, 10 G's into a trade, that's little old lady kind of numbers for a guy like me. So the point that I would just say here is I actually am more than happy just living with this. If after the merge and we've hit things like 200 SMAs, we've started to M out in earnest, yeah, maybe I might let some go. At the very least, maybe I'll just move my stop to scratch. But right now, I don't really want to get in there and tinker with this. I just want to let this thing work, in all honesty. So, all right. So that's sort of a picture of Bitcoin. And actually interesting on our Wednesday show. My prognostication was that actually I wanted to see the market go soft through this sine wave. Notice down sine wave, right? You can see the market was soft, up sine wave, market was pretty happy. Down sine wave, market actually in a good way, it really didn't come down that much. And I heard things like BlackRock Capital is now recommending Bitcoin to institutional players and stuff. So that tells me that basically for probably the next 6 months or so, I think what's going to end up happening here, and this is just opinion, but I think this is it reminds me a lot of last go round. But last cycle, did I have that on here? Yeah, this will work. So and same thing as that 1 inch. I mean, are we not starting to paint some weekly W's here? It's not quite there. But last cycle, what I saw ended up happening through the summer is, you notice we dipped down into 6K, then got out of there. Then dipped down, got out of there. Dipped down, got out of there. Dipped down, smaller rally. Dipped down, smaller rally. Dip down, and then one more FU. So also too, look at the dates. Do you see how that says July, August? So I actually think what you're seeing in crypto is this phase right here. Right in here. I think that's what we're going through. Is that your exit pump? Whoever said that over on the YouTube page? Could be. Can you make some money off of this rally? Keep in mind, this is a weekly price chart. We go back down to the daily price chart, and you see it was a pretty substantial rally. And the funny thing is I think we even had a, God, I can't even remember. I think we did the Vancouver meetup. When did we do that? I think we actually did the Vancouver meetup the next year, if I'm not mistaken. But I think I was in Europe through this. So the point being that was there money to be made on these kind of rallies? Well, that's a low of 5,700 up to a high of 8,400. Wasn't quite a double, but could you have made a couple bucks on that? I think so. I will say, though, that I do like the idea that we're probably going to have to come back to these levels, and then there should be one more just puke out sometime late fall, early winter. So just be aware of that. And yes, I absolutely think that this is our future, which sucks. But just remember, folks, if anything, the people that are really here to learn and you really want to make a lot of money down the road, you have to learn this. That's way too far, way too fast. That is not sustainable growth rate. Ironically enough, the process of bringing the market down actually sets up the next bull market. One might argue that if this thing had just sort of bumped along on a very sort of natural growth rate, probably would look something, like it'd be interesting to do like a linear regression study. Maybe it looks something along those lines. What sort of your average prices? Might be something along those lines. Which means that we probably have to, like here, we have to come back down into this window here. And then we'll oscillate around, and then we'll go zooming back up into the next halvening and all that shit. So the message you really need to take away from this, if you really want to trade this is totally speculative asset. When I see this kind of price movement, I believe from day one, Bitcoin is not blue chip. It is very much a speculative asset. So unfortunately, what that means is absolutely insane face rips. And guys are like, oh, I've got fuck you money. Look how fucking badass I am. And of course, there are people in the public that will take advantage of that euphoria and manipulate the market, Mr. Musk in particular. So try not to get sucked into his stuff. And if you ever hear that Remy guy actually make cryptocurrency music videos, that's your warning. The bull market's over. It's simple as that. But the message I really need for you to take away from this is to set up this bull over here. Whoops. To set up this bull over here that you're all going to make your Lambos with, right? All this stuff. You have to go through this. This has to happen. So the irony of it all is if you can just simply say, well, I believe in Bitcoin, and of course with the halving, it's like guaranteed to go up in price. I believe that the central planners are absolute idiots. And really, I think that the currency system is highly manipulated to make sure that the banksters continue their bank profit scheme, which means that the debt load will always be rising, always. And it will go on until the plebes just won't take it anymore. And there's some sort of realistic alternative. Since we know that the 1%, there's no plans whatsoever from any of them to leave this US dollar hegemony system, then we know that the debt load, the hyperinflation of your currencies, and really what I think is happening here is the United States let the inflation get a little bit away from itself. And they're actually probably going to spend the next 10, 15 years trying to slowly bring this inflation problem back into check. Countries like Canada, of course, who the guy running the show is a substitute drama teacher. He doesn't understand economics 101 at all. And what's really scary is the people that he's put in charge of the financial system in our country don't have any experience in the financial services industry. So clearly we're not going to get any leadership out of them. They're just going to do what the banksters tell them. You look in UK. I thought it was fascinating. The Bank of England raised interest rates. And the day that they raised interest rates, the prime minister is nowhere to be found because he's like, oh, you want to vote me out of office? All right, well, them's the breaks. Shit happens. Couldn't believe his attitude. And the Chancellor of the Exchequer, that person's nowhere to be found. So clearly the Brits, just like the Canadians, they've basically turned the whole future of their countries over to the banksters and said, politicians, man, politicians don't really matter. It's the banksters that are running the show here, people. That's why you're living in the hyperinflation that you are. It's not, ironically enough, it has actually very little to do with the politicians. That's the kick in the pants. The worst part about this, though, is that the banksters lulled them into a trap. The banksters knew about Jupiter-Saturn crosses. The banksters know about the money cycles. The banksters know about Jupiter-Saturn crosses and Saturn-Pluto returns, and they know about this. Why? JP Morgan himself even said it 100 years ago. You know, millionaires disrespect astrology, billionaires respect astrology. So don't kid yourself. They know full well. And what bothers me immensely is that the people like Justin Trudeau, who don't know anything about this, were just played like a fiddle. And now we have absolute economic disaster in our country. And I get the feeling he's going to be the scapegoat. I mean, God, I mean, Canadians are supposed to be polite and pretty respectable. And the way that he's being received in some cities when he goes, I mean, like literally, he's a social pariah. No wonder he's heading off to South America to get the hell away from Canada, because if he puts his head out the window in Canada, he's going to get hit by a rock. Anyway, so where am I going with all this? Just please understand that what you actually see happening in the marketplace, there's nothing new going on here at all. And the best way to see this, there's our dear leader flaunting and breaking the law. Anyway, TRI has a sort of social media captain, and this guy is just awesome. And he's also our sort of pseudo marketer. I think he's very good at getting the message across. Look at these beautiful images. I mean, very, very professional grade. Can't give Josh enough credit. Very, very top quality work. He actually put out, and actually it was weird. It used to be up top here, but I guess he got rid of it. But he put out the Benner cycle diagram. Actually, it's interesting that he got rid of that now. I don't know how you do this. I think you can like go on media or something here, can't you? How does this work? Media. Maybe this is it. Oh boy, but it's from forever ago. Oh, that's too bad. All right. Well, actually, this gives me a great opportunity to show you TRI's blog. I tell you, again, this is driven by Josh, and the work he's done here. I mean, this is worth the blog alone actually could be a university course in economics. I mean, especially with our study of things like decennials. I mean, this is one of Warren Buffett's favorite stock market indicators. I mean, if it's good for Warren Buffett, shouldn't it be good for us? You know, and yet you don't hear anybody in the market talk about this stuff other than a guy named Larry Williams. You know, looking at the political landscape and understanding that, keep in mind, most capitalism, especially who's going to win and who's going to lose on Wall Street, it's dictated by who's running Washington. So obviously us keeping an eye on how the markets move based on political drivers down in the States, hugely significant. Again, we could literally teach a university course off of this blog, and it's for free. I mean, talk about a sales pitch. Holy crap. I mean, it goes on. Anyway, what I wanted to show you here, of course, and I mean, look at the work that Josh does. I mean, it's incredible, the work he's doing here. But what I wanted to show you was Josh actually took the Benner cycle image and he cleaned it up and made it a little, and actually to the point now where if you go on like Google, this is so cool. You know, you made it when we go on Google and we go images. Remember, we typed in Benner cycle, and what comes up? The rational investor. Love it. Awesome. So you know you made it when your images that you produce are actually coming up on searches on Google. Anyway, this is Mr. Benner's study, and he did this back at the beginning of the 19th century. So that's how ridiculously cool this is. This is Josh's updated version, and hey, there is the site. Look at this image. It's so pretty. The point of the matter here is that you can see 2023, that's actually when we're supposed to hit the trough of this cycle. So would it make sense for Bitcoin to hit its trough of its cycle and do something like this in early 2023 here? Absolutely. You know, like what I could see, very easily see, and I don't know about that trend line there, what I would actually expect is I could go here to here. So nice market structure trend line. And ironically enough, this market structure trend line is probably going to turn into a low to high trend line. I could very easily see over the next month or two, Bitcoin rally back up there. I really could see that. Call me crazy. I mean, the interesting thing about this is, let's see if You YouTubers can get this. If I can clear through this traffic level, there, let's do a horizontal line. There. What's the term that I should be using to try and figure out where the next major traffic level is? Nice, Matador, you badass motherfucker. Volume lady. I don't know what that means. So believe it or not, I could very easily see us rally back up here. The term that I was looking for, I just let's give the YouTubers a chance. Hit the like button, subscribe, ring my bell. Ring my bell, ring my bell. No? Anyone? Anyway, the term I'm looking for is look left. You notice that if I look left, the next key resistance point is there. So that means if we clear through this area and I look left, you notice that that's the key low, that's the key high. See how that works? If I can clear through this area, where's the next traffic area? Look left. It's actually all the way up there. Now, I don't think we're going to be able to get up there, to be honest with you. I really don't. But I definitely like the idea of a nice rally up into this window here. And probably it looks something like that. You know, with some, you know, if it's like a weekly price chart, you're going to have some crazy ass wick. I don't think it's going to look like that. But you're going to have some crazy ass wick that's like, you know, like $2,000 or $3,000. That wouldn't surprise me at all. So be prepared. I could very easily see a scenario like that. And keep in mind also too, right? How are we going to get Ethereum up here? Look left. You can see it's battling at this line, which was up against these highs. You know, it's got some traffic to go. We got that high, we got that high, we got that high. And this could chop its way higher, but, you know, gee, next stop after all of these highs is up against that high there. And then, like we said before, where are your previous support levels? Because support usually turns into resistance. So that's kind of like thinking somewhere around there, right? And that's where I guess 38.2, right against all those candle body lows. Seems perfect. And oh, look at this. You know, somebody was asking me to look at the profile. What I see on the profile is what we call a muak. You see how there's a hole right there. This profile, ideally, it actually wants to look like a parabola. Usually what ends up happening with these things is as they go through the process of becoming a parabola, it will start out actually looking like a square. And then you'll see more fill in here and more fill in here. And ultimately it looks like a parabola. But can you guys not see that there's a big hole in our parabola right there? So we like to call that a muak, which in Spanish stands for kiss. And so the question I have for everybody is, can you kind of use your imagination of why would we use that term muak? Maybe a little bit. Anyway, also too, you know, like we said, good old fibs. It's not really rocket science. 38.2, 50%. So, you know, put them both together. I kind of like this market. Not a bad looking market. I mean, there's the W's. And like I said, look left. If we can clear up through here, that bot fires, you know, I don't see any reason why we can't jump up into these levels really quickly. Hey, what the hell, man? I'm a warm-blooded, red-blooded male, eh? And you know how long my wife passed away, Great Del Moody. So maybe the plumbing's getting a little backed up. I don't know. Okay, so that gives you an idea of the backdrop that I see. Believe it or not, folks, I actually think this is a good market. If you're here to make money from trading, this is exactly what you want. And this is the time of year. This is the normal seasonal window. This should last into September, October-ish. Then once that window closes, look out, folks. All hell should break loose. Now, supposed to actually spend the time here answering questions. I just don't think there were many questions. So let's see how we did. Maybe there were a bunch. I don't know. I got about 45 minutes. Then I have to take off for Liam. And, of course, I love your guys' positive karma around Liam. It makes our afternoons actually better. And I notice it does make a difference with him, believe it or not. All right. Yeah, I think I did. Looks like people actually put sort of written answers in here. So that's kind of cool. Hopefully that helps. That's good. Cool. Yeah, and Josh is so good at technical analysis right now. Josh could easily be, and this is California Josh. We've got UK Josh and we've got California. Actually, I think we have about 3 or 4 Joshes. We have California Tesla Josh. Gotta say, he's. It's a privilege to have people like Josh in my life. Yeah, that's right, EK. September is historically usually the worst month in the market. And so is October. And then also, too, remember our conversation about the decennial report. I mean, unfortunately, I think we're like right here right now. So like I said, I think there is room to move up. I think the Americans, this is what's going to happen to them. A country like Canada, believe it or not, I actually think what's going to happen to Canada is something like this. So I could very easily see Canada actually have to go back and trade back to those lows that we saw through the health crisis there a year or 2 ago. I could very easily see that. But believe it or not, I don't think actually the Americans are going to get hit as hard as the rest of the world. Probably. Right, this image that I showed you for Canada. This is the sort of the big sort of blue chip Canadian stock exchange traded fund, the XIUs. And I think Mr. Gann's analysis is absolutely spot on here. So I think Canada has to trade back against that low, that low, that low, all of this cluster of lows. And really all this is ironically enough, like through the health crisis, all they did was they just took literally 20 years of Canadian stock history and just wiped it out. And I got a funny feeling that they're going to do exactly the same thing here this year. And then on top of that, insult to injury, is $1 that you're quoting this in here today. Is that the same dollar as what this was quoted in here? And you saw that image that I showed you. It's not even remotely the same asset. So to all intents and purposes, yes, this looks like an uppy market, but in reality, actually, it's a fucking train wreck of the market. But Mr. Gann himself, he basically said that recessions, usually the stock market loses 50% of its value. So that's basically what this study is. The irony of it all, though, is that I don't think that the American economy is in the same situation as countries like Canada or Australia or the better part of Europe. They already went through their housing crisis. Now, a country like Portugal, it's not going to have a housing crisis because they already went through their shitstorm like 5-10 years ago. Actually, I guess it was 15 years ago. A country like Canada, a country like Australia, they boasted about how well they did through things like the great financial crisis? Yeah, because that was through a friendly commodity cycle. We are not in a friendly commodity cycle anymore, folks. We're in an unfriendly commodity cycle. So a country like Canada could get absolutely decimated. And then, of course, add insult to injury. Why are Canadian stocks as highly valued as they are? Well, it turns out about 30-40% of the Canadian market is based on oil. Uh-oh. What do substitute drama teachers want to do about the oil industry? I think when you're on stage, it's not politically correct to actually be friendly to the environmentally friendly sector. So substitute drama teachers, they actually, part of their plan, probably to get price down here, is to remove the Canadian oil and commodity sort of infrastructure that defines Canada as a country. They would actually ideally like to bankrupt that entire industry. Well, then what the hell are people going to do in Canada? Are people going to endlessly pay for overly inflated real estate? And our whole economy is going to be based on a never-ending real estate bubble? Oh, sorry, substitute drama teachers. That bubble is bursting. Uh-oh. What are you going to do, substitute drama teacher? Your whole thesis is falling apart. I'll tell you, this country's got trouble written all over it. Anyway, if we pop on over to the States, here's the SPY. Interestingly enough, there is the lows from the health crisis there, right? So notice how they're like nowhere near the lows here. And if we go back, this chart that I showed you is not even an adjusted chart. This is just raw price, right? It's not the M2 adjusted. Notice that low, that low, that low, right? And then basically the 2000 high, they're all basically the same level. But interesting enough, if you go look at the States, you see that this low is actually quite a bit higher than that low. That's that 2000 peak. So in a weird sort of way, I actually think the United States comes out a lot better than countries like Canada. But make no mistake, this market's going to come down a chunk too, right? And let's go, just if you need that friendly reminder, right? What do Democratic and the worst part about it is this political leader down in the States, I think he's actually going to destroy the economy to save his political bacon. So he will do everything he possibly can to try and stay in office. And you might actually find that they manufacture another health crisis. But notice, second year, new Democratic president, that's this dotted line down here. Notice that this goes to new lows. Into, oh, what a coincidence, right into that election. So it's not going to be a fun time this fall, folks. Please be aware of this. You're going to make some money in the market. Make your money now. And once we get through the latter part of August, if your cryptos, some people are kind of like, this is looking a little sketchy. I don't really want to take a lot of chance. Like somebody said, you see the dotted line. What did the market do through September? Pretty nasty market, eh? This is like the stock market. Could crypto just completely fall out of bed here? Sure. So, violent move up, rolling top. Oh, Jesus. What the hell's the end of the year going to look like? But as I said before, we started off like this year, right? We started off this year going, oh my goodness, this is going to be a mess for the next like 2 years. Wherever the hell that image is. Oh, thought I had it on here. The Benner cycle. Oh yeah, remember we did a Google search. Hey, this is going to be a mess. But the good part about this is once we're sort of mid 2023, I think we can all start breathing a sigh of relief. We still got about one more year of this shit to go. And then once we get on the other side of that, then we can start thinking Lambos again. We can start thinking about what's this new world going to look like. Keep in mind, you know, Winnie the Pooh, if he's still around, that'll be an interesting thing to see. But Winnie the Pooh, of course, has his Belt and Road Initiative. So I could very easily see that the Fed down in the States, of course, the irony of it all, again, is this site of any value? I think so. I think we can make the argument that we've been talking about short-term interest rates and what was supposed to happen here and how long this had to go on. Ironically enough, I think we had this thing taped. The only problem is you don't like the message. So you can see, and I don't know why this is so zoomed in like this. And there is our interest rate forecast. And interestingly enough, no pun intended, the consensus is for about 3.5%. And ironic enough, if you actually listen to the talking heads, you listen to Powell himself. He's publicly saying that he wants to see Fed funds somewhere around 3 to 3.5%. So I don't think this is an accident. And then I won't do it here because it'll just take too much time. Maybe if somebody is interested, I can show you this Monday, Tuesday daily brief. But if you look at the course of interest rates and the Fed spread and all that kind of stuff, everything's right on schedule. I mean, this is basically what's going to happen here. And you can see where this cycle is supposed to come to a trough, and that's August 2023. So could I see a situation where we get like literally 1 year from today? Where was that chart I was showing you? I can't remember where it is. Oh yeah, Benner cycle. 1 year from today, it is July, August 2023. We could actually hear that the Fed is done raising interest rates and they believe it's time to start stimulating the economy. And here we go again. The whole damn thing starts all over again. So there's your 64,000 foot view of the market. And this would align perfectly. I will load this because, you know, you are a crypto audience. So I think this makes perfect sense for you guys. Whoops, that's it. Uh-oh. That's not a good sign. Chris, am I still with you? Can you hear me? Oh, there it goes. Notice it totally stopped there. Still here? Yeah, okay. Notice I'm giving away all the secrets, and all of a sudden Big Brother's like, you know what? Maybe we should kill this guy's computer. But, you know, you guys, you know, being the crypto people that you are, you know, this should make perfect sense. Or I haven't really shown you guys this chart in a while, so we might as well pull it back up and see where we are. But, you know, 4-year cycles. When's the next halvening event? You know, it's interesting. I did the low to high. I still like the idea of a really nice little counter trend rally. But, you know, based on our 4-year cycles, and these are sort of like typical crash. How long does it take to bottom? When we finally halvening? How long until the next rally? All that kind of fun stuff. And you can see that the lines are almost identical from cycle to cycle. There's that one. Then there was this cycle. It's really tough to see, but I'll just quickly show you. There they are. Same numbers. Almost identical, really. And in a weird sort of way, it has to be that way. Because this is incredibly algorithmic, right? The happening is going to happen whether you like it or not. So the point of the matter here is 1 year crash cycle. There's when I actually expect Bitcoin to bottom. Interesting. That says October of this year. There's the trough window, January, right? So that's sort of like here to here. Right, if we show you. Oh yeah, that's what this is, right? There to there, top to bottom, there, top to bottom. That if it's exactly 1 year, then that comes in November. I like that thinking. Remember what we talked about with the election, right? So how long does it take to go from, okay, we've hit the bottom to it's a new bull market? That's 525 bars. So there's the bottom there. And then notice there's the halvening event, right? Halvening event, breakout, new bull market, halvening event, breakout, new bull market. This is your window. If you want to invest in Bitcoin, I think this is your window that you really want to concentrate on. It's interesting how Paul on our Wednesday show, he's been talking a lot about the pi cycle or the P cycle. I don't know what the hell it is, PI. And now it's saying to start accumulating here. I think we're a little bit early. But through this window of the next 6 to 8 months kind of idea, is this your time to be looking for bottoms and actually starting to accumulate? I actually think so. Yes. Now, we've done lots of studies of cost of production over the years. I'm not going to go into that, but I still think cost of production is somewhere around 10 Gs. And interestingly enough, since we did make our bottom here around, what is that, 18,000, somewhere in that neighborhood, if we had that same scenario where last time around, actually not that time here, we consolidated, and then had one more 50% fuck you into the bottom, well, that would make perfect sense. If 20 G's is our low, we have one more FU against the bottom, then that means that we're going to get some sort of panic dump into that 10,000 area. And I like that as a bottom. 20,000, are we cheap? No. Are we expensive? Well, the old highs were like 60 some odd thousand. So we're about 70% off of the highs. That's getting cheaper. It's not like, Brian cheap ass cheap. But if you were a little old lady, you heard me earlier say, I wouldn't have a problem if you just put yourself on a dollar cost averaging plan now that we are in reload zones and just slowly accumulate over the next year or so. I think that makes perfect sense. So, and how ironic, 23 will be our bottom. Winnie the Pooh or whatever, whoever's in control of that fucking mafia state over there, they'll just be pumping their centrally planned, you are a mindless drone and you mean nothing to the government. You do as you're told or you're head off to the concentration camp. I really hope our country in Canada does not go down that road. It could. We are in the period of human history where dictatorships come alive and dictatorships do really well. Last century, it was people like Mao, Hitler, Stalin, Mussolini, Tito, right? You can go on and on and on and on. This cycle, it appears, Winnie the Pooh, Vladimir Putin, substitute drama teachers. Cycle before that, that gets tough. I don't know who the dictators were. Obviously we know the great emancipator. He was on the other side of that equation. Thank heavens. I mean, who's going to be our great emancipator this cycle? Lord knows we need one, eh? Fuck. I don't know about that. Oh, God. The sad thing, no, don't say that. You're going to get me shot if you say stuff like that. We need an emancipator. We really do. We really do. Gulag Archipelago. Yeah, that might be worth taking a real good look at, eh? Who is the, wasn't it, I want to say Sosa Yetsin or Sitsunitsin or Toltsiensin or something like that, the Russian writer, um, who, was he not the author of that book? I think everybody in the West, while we still have a shred of freedom, we really, really need to remind ourselves about how bad military and totalitarian dictatorships can be. Solzhenitsyn? Yeah. Lord knows we need somebody to stand up for the little guy here. I don't know who it's going to be, but God, it's tough, eh? Anyway, so the point of the matter here is it's all of your jobs. You know, you can see exactly. In fact, here is June 2023. Everybody's job watching this video at TRI. You know, for God's sakes, you know, if you're in Vancouver, please reach out to me and help me. We got to somehow keep our heads on straight through this window. And we just have to keep reminding ourselves that Bitcoin loves to rally the other side of halving events. We could very easily go right back into life-changing events that can make you millions, and maybe you buy your islands and you just check out of the world. But we all got to work together to somehow keep our heads on straight, because this next year is going to be very, very bumpy. Hang in there, folks, please. All right. Now, is Brian ever going to actually get to the questions? What time is it? All right. So actually, I still got an hour. I'm not terribly out. Oh, good. So there's only 2 questions, so no big deal. All right. So question number 1, what are stink bids and what is a Wyckoff check? Is it referring to the same thing? Wyckoff check, and actually you just saw one happen in Bitcoin. All the Wyckoff check is you know, in the level 1 course, it was suggested to you that a bull market is nothing more than a market making higher highs and higher lows. That is the definition of a bull. And if it's a really strong bull, this is what we call bullish market structure. So if it's a really strong bull, then what you should see happen, and you probably heard Brian talk about this in the past, is think of this as a W. And I want to buy the middle part of the W right there. So, you know, they used to call these Dow bottoms. So just then, Dow, of course, lived over 100 years ago. So this isn't anything new, folks. Mr. Wyckoff, his name is Richard Wyckoff, and he sort of was like, think of W.D. Gann and Charles Henry Dow, J.P. Morgan, Vanderbilt, Jay Gould, all those people. Think of them as the big, bad, nasty capitalist of, say, like the 1980s. So if you thought about like Carl Icahn, I don't know whether you ever heard of him or not. He was a famous corporate raider. Ted Turner was, you know, the famous guy who brought Turner Broadcasting, and of course, ultimately turned into CNN. Bloomberg, right? He created and started up his yeah, I think all of the shit falls apart after that merger, Heidi. I think that's actually a really good reference date. So if you know what the date of that merger is, that's probably a really good fundamental window that we could use as sort of a market should rally into that window. So somebody want to write down the merger date. And the problem there, of course, is that they keep kicking the can down the road. So if they come out and say, oh, we're putting it off for another year, Jesus, here we go again. So if you have, though, a date of that merger, I would think of probably a rally into that event, buy the rumor. Then once that's done, sell the news. There's your top. I like that thinking a lot. Okay, back to our question. So if you can think of things like, Turner, Icon, all Bloomberg, I remember the guy who Bernie Madoff. He actually got the NASDAQ going there years and years and years ago. So those are sort of like the Gans and the Goulds, the Vanderbilts, the JP Morgans. And then Richard Wyckoff is like Kathy Woods. Right? That's probably a really good way to sort of think about that. Pretty popular nowadays. Is she infamous yet? I don't think so. But probably after she's long gone and died and stuff, she'll become famous. So the point being that, like I said, these are called Dow bottoms, right? And then there's another one here, right? Each one of these is a W, right? This one goes there to there to there to there. I'm a W. This one goes there to there to there to there. I'm a W. So hopefully you can see all this is just a string of W's, W after W after W after W, i.e., what's the definition of a bull market? Higher highs and higher lows. Mr. Wyckoff sort of articulated the message that if this is actually supply and demand, then what's actually happening here technically is demand, we'll just do it as a D, is overwhelming supply on this event right here. So why did the market turn down here? Because right here, at this point here, supply overwhelmed demand. So something clearly changed in the market on this event. Now demand is overwhelming supply, price must go up. Mr. Wyckoff found that there's a lot of people that like to buy W's in the market. And in fact, there's also a lot of people like Mr. Beamish who will say, don't chase. Maybe the market's here now, but don't chase, don't chase, don't chase, don't chase. Why? Because it's only here that you can actually quantify the amount of risk that you're taking. This is your risk window. I'm going to buy on a breakout of here, and I'm going to risk to a bottom of here. This is that supply-demand equation. This is my risk window. So if I come up and I buy here, well, now my risk window is here down to here. Too much risk. I don't want that much risk. I wanted this much risk. So what's the solution? The solution is don't chase and place an open order to buy right here. I will place an open order OO to buy. Right? And might do it like 1 penny above this breakout level. So that way, if there's any pullback at all, if it can come back and kiss that level, boom, I get filled. I bought where I was supposed to buy. And this process of the market coming down and kissing the breakout level and then turning back up, and this is the most important thing here, is the market kisses the level. It does not go through that level. There was so much demand, because remember, demand now is bigger than supply. There is so much demand that whatever supply was for sale, it just got gobbled up by all of the open orders that are sitting right here. Mr. Wyckoff called this a Wyckoff check, or in essence, we're going to check whether this actually really is a serious demand pocket. That's really what it all is. And literally, this is a Wyckoff check. Came down, checked the previous breakout level, turned back up. I am still a strong bull. This is a Wyckoff check. I came back down. Demand is still strong off of that level. I checked it. There's lots of open orders there. The market turns back up. Called a Wyckoff check. Simple as that. Posted some Gulag deets in lounge and Wyckoff in level 1 room. All right, thank you, Josh. And in fact, actually, we have a really, in the library, we actually have a really simple image to show you what that Wyckoff process of marking up and marking down the market actually looks like. The Wyckoff market cycle. So there it is in all of its glorious Technicolor. So you see the checks, you see accumulation, you see distribution, you see the markdown process. This is the way the capitalist machine works. Now, what do you think? Do you think Bitcoin operates off of this? How about your shit coins? Do you think your shit coins operate off of this? The answer is an unequivocal yes. It is just the way the capitalist process works. All right, so that's Wyckoff. Your other question was, what is stink bids? Now, this is just simply a commentary on current price action and the term stink is really a reference to what would the person who wants to sell the asset at a given price, what would they think of your offer to buy? So here, for example, if this is our trading range, of course, we're all good technicians, and we don't want to buy until we see things like reload zones. And oh, by the way, the original market structure bottom just so happens to be in our reload zone. Could we call a move down into this level a Wyckoff check of the original W bottom? Sure. There's nothing wrong with that. But if I was selling the asset up here and disregard the numbers, let's say this is $10. And let's say this was $1. So we know by definition the 50% rule is going to be 10 plus 1 is 11 divided by 2 is what, 5.5? Well, that's where your 50% level is. And, maybe you call the guy up who's selling stock. It's a market maker. And the thing's sitting there trading away at $10. And you say, all right, Mr. Market Maker, I am willing to buy at $4. I will place my open order to buy at $4 right in the reload zone. What is this market maker up here going to think with the price of the asset at $10? What is he going to think about my bid at $4? Is he going to like that bid? Maybe this isn't a market maker. Maybe this is another cryptocurrency enthusiast. And maybe that person bought here at $9. And he's up a good 10%. So he fancies himself a killer shitcoin trader. Look at me, I made 10% on my money. I'm so cool. What is he going to think about? And he, we're at a cocktail party, and I look at him straight in the face, and I'd say, "Yeah, I'm willing to buy your asset off of you at $4." What's he going to think about that bid? He's going to think it's pretty smelly. He's going to think it kind of smells like horse shit, right? Hence the term stink bid. Because frankly, he's not going to be impressed. So that's the term about stink bid. Now, remember, in capitalism, does it make any difference what this guy thinks about my order up here? Does it make any difference at the end of the day? Makes no difference whatsoever. And if some sort of fundamental event happened where the market cranked down here into my $4 and somebody's panic selling, get me out, get me out, get me out, and I get my fill at $4, boom, I've been filled. Right? Because how often do markets trade back into reload zones? It happen pretty damn often. Does it make any difference at the end of the day? No, doesn't make any difference at all. But I'll tell you, I'm more than happy being long from 4, especially if this crash comes, instead of getting filled at 9. So, Bitcoin, same analogy. There's some stupid fucking loser idiot right here going, technical analysis doesn't matter. Just buy. Use my referral code, by the way, because I really like gold-plated stakes. And you guys are just buying my shill hook, line, and sinker. So thank you very much for the gold-plated stakes. Do I give a shit whether you actually make or lose money? Nah, not really. Was it a good idea to buy here? Well, hindsight's 2020. Could you have been sitting there and say, you know what? I'm willing to buy Bitcoin at, 20 G's. With Mr. Gold-Plated Stakes, would he have liked my order? Would he have liked my comment that, actually, I took this guy's course and he told me don't chase. If I want to buy, work my bids in reload zones. Yeah, it's a stinky bid, but I don't want to pay the prices that you want to sell me this at. I want to pay these prices. Is that a stink bid up here? Oh, yeah. They're not going to like it at all. Is this the right decision? Well, you tell me. How you feeling if you had your bid working down here at 20 G's? I'd say you're probably feeling pretty damn smart, pretty good. So if it's one thing that is super important, yeah. If it's one thing that's super important here, is that capitalism does not care whether something is moral or not. It just doesn't care. Goldman Sachs was issuing bonds at the top of the 2008 financial crisis, and at the same time that they were underwriting the bonds, they were taking short bets on those bonds. Holy conflict of fucking interest. That is immoral. That, let alone unethical, that's immoral because they knew that the bonds that they were issuing were garbage. They were worthless. And they were taking short bets on them right as they were coming out of the gate. Don't they have a responsibility to say, you know what, these things aren't really that good quality. Maybe don't buy them. I would have thought, isn't that what fiduciary means? How about these central bankers? I mean, what the hell's up with them? They all know about these Jupiter-Saturn crosses. I mean, this is what really angers me about something like Grandma down in the States and Chair Powell. I mean, what the fuck? At the very top of the crisis, fucking Granny was like, spend, borrow money, please, borrow tons and tons and tons of money. She wanted to like double, triple the amount of borrowing. Can you imagine the massive hyperinflation that would have happened if she had gotten what she wanted? Are you trying to tell me that this lady who's literally worked her entire career in the banking system and has probably watched at least 2 or 3 of these Jupiter-Saturn crosses come and go, are you trying to tell me she didn't know what was coming? Holy fuck. Or maybe there's some sort of ulterior Klaus's Great Reset that's happening here that they just don't want to tell the public about. That's what I think is really going on. So you can do with what your money as you please. I had told all of you guys at the end of the last cycle, there was no way I was going to be long Canadian assets. And frankly speaking, I don't want to be long Canadian assets. I have to be in my registered account because it's my retirement account, and you're legally required to have like 80%, domestic content. But other than that, man, I hold very few Canadian assets. I am long a lot of government or U.S. dollars. And I hate to say it, folks, but what I think is going to happen here is exactly the same thing that happens every one of these damn cycles. And why is it not in the Fed's job description to try and educate the public on what happens through these cycles? And now I'm starting to hear that people are actually going to start, and probably the best way to show you this, I mean, it's shocking when you look at this. I'm now actually starting to hear some, ex-bankers starting to say that Chappelle now is going to go to war on inflation. That was exactly what happened here because the inflation just got out of control. So if anything, why wouldn't we see the same thing this cycle? This was the last big Jupiter-Saturn fear cycle cross. This is the current one. I don't see any, and you can see, I mean, W's, I mean, we can do, well, you can see I've got Foggenbaum levels for all the Foggenbaum fams. I mean, you can see where this thing's going. And this is the tragedy of it all. And this is why I think actually the U.S. is going to do fine. Is that it's the United States of America that's actually going to bankrupt all these MMT people, the socialists, the idiots like substitute drama teachers that go, well, money doesn't matter. We can print all the money we ever need. No, you can't. And you're going to get schooled hard on why you can't. So, anyway, I don't know whether that helps answer the question. What was the question again? Brian gets off on these tangents, and it's like, oh, but where the hell is he going next? Oh, yeah. So stink bids. Did I help stink bids? I think I helped answer stink bids. And I hopefully helped answer Wyckoff checks. It's not exactly the same thing, but it's similar thinking. It is similar thinking. But hopefully I gave you a walkthrough of what a Wyckoff check is and what stink bids are in my eyes. Number 2, from Ryan. Ryan, I recently purchased full site access. Well, that's cool. Will you please go over the weekly commodity trend summary and how to properly digest its information? Also, will you walk us through how you start your trading day using information provided on the site? I just watched the introductory video, but it doesn't go into great detail for paid users. Okay. The issue there is, I don't know where, I guess you're in the level 1 course. So in the level 3 course, like we kind of like walk you through a number of different sort of ways that you can frame your behavior in the market. And we have a number of different rooms that open up for like the professional traders. So, level 3 program, Zach actually works as a great gatekeeper to sort of direct you where you want to go. Are you harmonically related? So we have a room about harmonics. And of course, the harmonic guys, they start their day in a very specific way. We have a room for day traders. Now, obviously, a day trader, they're going to look at things very differently than, say, a position trader or a swing trader. We have the TRI Secret Options Formula Group. They're the people that trade options and that trade warrants and that do a lot of position trading in the stock market and swing trading, stuff like that. Obviously, they have a different cadence to their behavioral pattern. I think, if anything, I would prefer, Chris, this is probably a really good conversation for tomorrow, right? Actually, in the daily brief, where sort of, okay, how are we going to break apart the dashboard and use it to help sort of frame our expectations for the day? I don't know whether the YouTube sort of free broadcast, I don't know whether that's the appropriate place, but Chris just said that he would remind me. So let's attack this question in earnest tomorrow morning. That'd probably be better. This is like more macro stuff. How do we want to sort of handle, the level 1 course? How do we build a trading plan? What are the sort of components of how the various setups that we try and teach you in the level 1 program, how they work? So if anything, Ryan, what I would say here is a couple things. Number one, I'd be curious, Ryan, if you are here. I don't know whether you are here or not. How long did I tell you it takes for you to really understand a new job? And I don't think it's an accident that actually I find most of my students that go through the whole education program from start to finish, and I actually start talking to them about, do you feel like you're actually ready to be a trader? Ironically enough, it's about exactly the same time. So I'd just be curious for the YouTube audience, do you know what number that is? Let's see if Great Del Moody can spit that out. Think of my old accounting job. That's the analogy I would use to answer that question. How long does it take for you to be working away at any one job to actually really fully understand the job and really fully understand what the hell you've gotten yourself into? You people in the Hangout, you're more than welcome to answer this question too. Well, Andre, what we need the Fed to actually get back to Mr. Volcker's kind of thinking. And I actually listened to a really interesting old Fed governor who's a really old guy, and he's still alive. And he was actually working in the Fed through that last period. And the problem is that everybody that's working in the Fed right now, none of them were alive. And not alive. But none of them were actually working in the bank and being Fed decision makers when Mr. Volcker was around. Because it turns out Mr. Volcker was actually a really big fan of Milton Friedman. So go figure, eh? So anyway, I tweeted out, and after this video, if you want a really, really good podcast to listen to, I tweeted out earlier today this gentleman's podcast. I mean, it's a bit shilly. He's a stockbroker. But I was actually really, really impressed with the conversation that he had with this gentleman, Dr. Lacey Hunt. And not him. He's the interviewer. But this guy. And he is old as dirt. And right now, and I put out a whole bunch of rants about it, including his comment that the Fed is actually relearning what money actually is. Because keep in mind, this current Fed governor guy, he actually believes that M2 money supply and inflation are not connected. And it's so funny listening to this guy because he goes, okay, so they blamed inflation on this, wrong. Blamed inflation on this, wrong. Blamed inflation on this, wrong. So it's like the Fed is actually going through the process with our lives. The Fed is going through the process of trying to teach itself what the fucking causes inflation, when it's already been fully discussed and everybody knows exactly what causes inflation. But the problem is that they did this and they don't want to publicly have to come out and say, yes, what we did is actually the reason why we are going through this inflation. That's the real thing that's going on here, folks. And that's probably the most important thing about all of this, is that the Fed, it's almost like they're stupid intentionally. But I don't think they're stupid. They're just conveying the message that they are stupid intentionally. But eventually, when after the fact has happened, I mean, you look at Powell. Powell looks like himself, like he's about to fucking keel over and die. They'll be long gone. Some other fucking bankster that, just doesn't understand how the actual inflation machine works will be put into position. And then eventually they'll go, well, the lessons that we learned from the COVID crisis were don't go and mindlessly print money because it's going to cause hyperinflation. Oh, what a surprise. Didn't we learn this 50 years ago with Mr. Friedman? Oh, yeah, but we had to bail out the banks after the ridiculous issuance of bad bonds by Goldman Sachs and JP Morgan and all these banksters that are just crooks by nature. And, well, of course, they were too big to fail, so we weren't going to let them go under. So anyway, the point of the matter here is there are smart people in the world that actually know exactly what the fuck is going on here. And that's what pisses me off about this, is that for some stupid reason, it's only the idiots that are in charge. Substitute drama teachers are in charge. Goddamn fucking guy is talking to ghosts on the stage and shaking hands with people that aren't even there, are driving the bus right now. Like, what the hell? It drives you crazy, man. It drives you. And, the only reason why substitute drama teachers are in charge is because this is exactly what the banksters require to pull off this bullshit. So there you go. I mean, I don't even want to start about the girl that's actually the finance minister of the government of Canada and her resume for actually being qualified for this job. It's insulting is what it is. But oh well. This is why I call this, I actually think that this was the crime of the millennium. That's how big this crime is, that what got pulled off here. This was the crime of this, not the century, but literally this is the biggest crime that's been pulled off in 1,000 years. That's how big this crime has been. Klaus's Great Reset. You will own nothing because, of course, we're going to hyperinflate the prices to absolute ridiculous levels. You won't be able to afford to buy. And if you aren't happy, well, here's a nice polite bus ticket to your local neighborhood concentration camp, where maybe we'll give you a lobotomy to encourage you to be happy. So there you go. A crime of the millennium. Can we please start getting back to this guy? And people who are actually working in the Fed and in central banks in a time period when we actually had sane people who were actually operating the system, can we please bring some of them back to fucking right the ship? But we won't, because it's not in the banksters and it's not in Klaus's best interests. Drives you crazy. Now, I told all of you, we have a huge political event coming up here in the United States of America this November. It might be one of the last opportunities for the public to actually try and take back control of the system. It'll be interesting to see how it goes. If guy who's shaking hands with ghosts and mumbling nonsense, if he's basically got a blank check to do whatever he wants for the next couple of years, then I think it's probably too late. The sad part about it is to actually bring the world back to normalcy and back to sanity. It actually means that the stock markets of the world, Canada, and that nonsense, right? What it means to actually bring sanity back to the market is that this has to happen. So the question at the end of the day is Klaus going to let this happen? And frankly speaking, I don't know the answer to that. So there you go. All right. As for using the dashboard, 64,000 foot view. I'll tell you what I'll do here today to finish off the broadcast, and then we'll call it a day, is I'll talk about the free part of the site. And then tomorrow in the daily brief, we'll go into detail about the paid part of the site, and how I would use the information as it is right now to set up your trading day. So the free part of the site, if you sign up for the 30-day trial, everybody should get the basic overview page. And the good part about this is it gives you generally a good idea of what's happening. Obviously, you're not going to get a view of the individual market breakdowns, but we should all look at this S&P 500 breadth, and you should all look at that and go, oh boy, that looks a little dangerous, because frankly, I think it does. And maybe crypto has to go sideways here for a little bit. I mean, we don't know whether crypto is going to break out yet or not. I showed you what the crypto chart looked earlier. I mean, setups are setting up, but they haven't broken out yet. On balance, if you click on any of these things on the free, it will encourage you. Like, for instance, if I click on the bonds free, it will encourage you to sign up for the site. You will not be taken to this page. So this page I will refrain from talking about today. As well, the free, if you click on these, it won't load any of this. Again, I'll refrain from making a specific reference to that. What this will just simply show you is, just really simply put, how many markets, and keep in mind, this is a weekly look at the market. So weekly commodity trend survey is nothing more than just a question about what are the weekly price trends. So for example, if we look at Bitcoin, just keep it really simple. We look at a weekly price chart. Our simple, and this is a level 2 concept. So if you're in the level 1 program, ironically enough, it's actually going to be very hard for you to understand what's going on here, because you haven't been formally taught about moving average systems. In essence, this weekly commodity trend survey is nothing more than a moving average system. And it just simply asks, here's my default sort of trading view, TA. Keep in mind, there's nothing new. Wow, look at that MACD. That looks good. I tell you, man, it looks to me like market wants to rally here. Okay, so this is a weekly price chart. And all the weekly commodity trend survey does is just simply ask, is the market above or below? Well, actually, it doesn't even ask that. It just asks, are the moving averages themselves pointed bullishly or bearishly? And in this particular case, you can see the fast move average, come on, weekly price chart. So fast moving average crossed bearishly below the slow moving average way back here. So I would actually say that Bitcoin has actually been trending. Terrible spelling. I think I got that right. Anyway, trending lower from here. We are officially trending lower. And you tell me, was that a correct call? I think so. Looks pretty good. Right? Did we break down as of here? I'd say yeah. And we will not get a bullish sign on is the market trending until we cross back bullishly. And you can see how we cross bullishly here. I mean, this is why I like to use this moving average system, because it keeps it really, really simple. Don't overthink this shit. You can clearly see, I'm trying to show you the chart. There we go. Right, that's where we crossed bullishly. You can even see cross bullishly. Oh, it didn't quite make it. No, back to bear. Cross bullishly. Looks like we're good to go. And was that a good signal? It looks good to me. We didn't cross back bearish until here. Cross back bullish here. About the same level. Cross back bearish here. About the same level. And now we've been trending lower. So is that a good signal system to use? I used to run this on a weekly basis for all of my commodity investors, and we swore by this. I mean, it's just really, really simple. Don't overthink this shit. So all the website is, you pop on, you see weekly commodity trend survey. A buy signal means, number one, the market is at the bottom end of its range and it's below its 50% rule. And you have that bullish cross in the moving average, right? And I guess that would be sort of like if we looked here. This isn't even really that good of an example. It's okay. That was a buy signal. It's not really that great of one. And actually, is this 52 weeks? Maybe that's not right. March. Oh, yeah, it is. So, man, I mean, I'm not going to say this is a great signal, but it would have issued a buy signal. What did I do? Because the moving average, sorry, it's so hard to get it, right? Moving average crossed bullishly and we below the 50% level. This, of course, was a much better signal, right? So 50% levels way up here, cross bullishly. This right here issues a buy signal right there. Moving averages cross bullishly. Market is a million miles away from its 50% rule. And this is basically your trade right there. So that's what the weekly commodity trend survey is trying to find. When it says it's a buy signal, it's trying to find markets that have been beaten down. They're substantially below their 52-week 50% rule, and they're crossing back bullishly. The moving averages are crossing bullishly up. Now, you look at the dashboard right now and you go, Brian, there are 0 buy signals. Well, why? I don't know whether you noticed. I mean, if we just use the S&P 500, for example, how are the moving averages positioned right now? Is that bullish or bearish? That's bearish. I might even argue that not that long ago, 52-week range, this actually spat up a sell signal. The only issue with this is, would I still want you to be selling here that we've already hit this 50% rule? No. And in fact, there won't be any signal here. It's gone as soon as we hit this level. So right now, you shouldn't get any signal. And keep in mind, most of the market, I mean, you pull up almost anything, it's going to look like this. What's really interesting, and keep in mind, for the sort of basic site membership, all I want is I just want a 64,000 foot view of the market. So that's what this is. This is me looking at the bond market, the commodities market, the country funds. Remember, country funds, if you listen to the description from the daily brief video in the library, if we get an overbought reading from the country funds in both short and medium term, it means that the whole fucking world equity market is about to roll over. Look at the S&P 500. Does that look like a buy signal to you? So it's understandable that we're going to have almost no issues that are spitting up buy signals. The question ultimately is, do we actually have any markets that are spitting up sell signals? But as I said to you a moment ago, the sell signals, they've actually come and gone. We're kind of like in no man's land right now. We're not really at the top end of the range. We're not really at the bottom end of the range. We're kind of stuck in no man's land right now. Excellent, Andre. So Andre says maybe we should be hunting shorts in those country funds. Let's talk about that in the paid for part of the tutorial tomorrow. How do we go about using this information, then drilling down and hint, hint, hint? Hey, there's a whole sector called country funds. Ooh, is that getting a bit overbought? You tell me. All right, the answer's right there. Can we go through and just surf through the world's country funds looking for short setups? You tell me. But we're not going to get into that today. This is the free portion. So the only other thing, again, so I've told you a little bit, this is your 64,000 foot view of the market. There's no way you're going to get buy signals with that looking like that. No, the question ultimately, are there shorts? Also on the free, you actually are getting usable information from the free site that, hey, maybe we should be hunting for tops. Maybe there's a short trade developing in some of these markets. And then finally, off of the free, you get to see a little bit about my journal. Just keep in mind, I want to be the best demonstrator of best practices for you guys. I've committed with a couple other people on the site to what we call the Transparency Pact. Yeah, well, puts on Canada. I mean, what's really cool is our TD bank. Yes, I love shorting Canadian banks here, folks. And that's where the trader starts stepping up and saying, okay, how do we make money on this train wreck of a substitute drama teacher running the country? I know. Let's go short some of this shit, right? Make some money off of this. But anyway, back to our conversation here. I don't know whether you actually get access to view on the free, but at least you can see my journal, right? And you can get an idea of how active I am journaling. What am I doing? And the dovetail to this is Sjord's working on it right now, is there should be a nice little trade log here where you will see every single trade that I do, every single trade, because I am an open book. That's my job here, is to try and be a demonstrator of best practices for you guys. And that includes, keep in mind, not only am I trading, futures, contracts, and stuff like that, but I also write down a lot of stocks and stuff that I'm buying. So, I mean, let's see if I can find you some stocks. There's my weekly review. Like I said, psychologically, I had a really, really tough week. And I was actually proud of myself that I even made. I was profitable this past week, even though I had a train wreck week psychologically. But, basically, there's my day trading activity. Where's some position trading? Like I'm buying stock because, there's some names in the market that I absolutely love down here. So I've been buying some stock. I mean, you see what I've been talking about with the junior market. How about that oil market? What are we supposed to think if we ever see market smiling at us? Oh, boy. Remember what Mr. Trudeau wants to do to the Canadian oil industry. Uh-oh. I do lots of sort of how do I feel and sort of, stuff that I'm observing in the marketplace. I wanted to show you a couple stocks that I've been buying. Good looking day trades. Hey, there we go. Here's some stock. So I really love this. These are interesting ones. This is from our TRI SOF group. This is one idea from one of our OGs in there, Curiosity Stream. What do you think? Does that kind of look like a shitcoin, right? That's cool, Ryan. So I think what I told you most importantly was we're going to break the answer to your question into two parts. And I'm just sort of talking about the public site function. Tomorrow we'll talk about the sort of paid site functions. So I'm an open book. Now, like, can you actually access this journal off of the free site? I don't know. And frankly speaking, I would actually prefer not. But if Fjord has it that you can access this off of the 30-day trial, so be it. It's no big deal, one way or the other. I don't know whether you can access the blog. I think you can, but oh my goodness, this blog right here is worth the price of a bloody subscription alone. And it's free. I can't believe the work that Josh has put into this thing. Great Del Moody, he'd be the type of guy, he'd be mining this shit out of this. I mean, it's just incredible information. A little free sort of news thing from the Associated Press. You can watch previous offerings from the site, the videos. There is our free, TRI PMA Twitter feed. All right, Ryan, to be perfectly honest with you, he said he's in level 1 right now. You're just starting. And it's cool that that you are so gung-ho that you want to subscribe and you want to learn. I mean, tomorrow we'll get into understanding Brian's basic signaling system. You just did the level 1 course. Would it be handy for you to get like a list of stocks that are making key reversals? How about weekly key reversals? Would this be handy information? Is that worth the price of a subscription? Yeah, slightly. So, like I said, I'm not going to get into the paid part of it today. But what I want you to see is just, the overview page and how you should use that. So maybe, Chris, we can piece together maybe a 5-minute little video summary of the free overview page. And then maybe we can juxtapose it with sort of Brian did in the daily brief, sort of a review of the paid for pages, in a daily brief. What do you think? Does that sound good? Something like that. Then finally, off of the free page, I got to get out of here, don't I? The last thing that I like to give you guys is just an overview of where is money flowing and into and out of with regard to the exchange traded funds. So this right here gives you a really good snapshot. And frankly speaking, I would be more than happy to run a mutual fund that would just simply have the best 5 ETFs were long, and the system is constantly kicking out of the mutual funds names that are not on this list and buying up new names that are added to this list. And I did this off the 1980s website, and the fund dramatically outperformed. So, eventually down the road, I'll get Sjord to build this fund. And I would also make the argument that the bottom ETFs, well, this is the part of the market you want to avoid like the plague. And I don't know, you tell me, what are we seeing here? We're seeing 1 to 3 year bond fund. We're seeing treasury bond ETF. That's the short durations. What else have we got in here? MUB, what the hell's that? That's the Muni Bond Fund. What's next? EWW. This is interesting. Mexico capped ETF. Now, that's interesting that Mexico is actually in a bit of trouble here. So that's an interesting addition there. And then finally, what's finally on our list here is shit. How about the TIPS bond fund? Now, are you getting a bit of a theme here? Do you see how you could use this to basically articulate where I want to be invested and where I better stay the hell away? What should I be invested in? How about the utility funds? Well, they actually do really well if the Fed is cranking up interest rates. Well, I guess that makes sense. How about EWZ? Who's this? Brazil. Now, what letter of the alphabet does that look like? It's kind of interesting how about 6-8 months ago, we were actually seriously talking on the site about investing in Brazil. Go figure. It actually looks pretty half decent here. And look at the indicators. Is that not a bullish divergence in the DI? Holy shit. Oh, what's next? XLB. What's this? Oh, this is a basic materials ETF. In essence, this is telling you, and I don't know, has anybody looked at the gold price recently? I'm hearing a lot of people talking about gold outperforming. XLE, what's this? This is the energy sector. Energy's coming back? Well, on a relative basis, it seems to be outperforming. From what I hear, these energy stocks are making money hand over fist. And who is the finalist on this? Is this Germany? Go figure. You're supposed to buy the German ETF. Look at the indicator. Jesus, that thing looks strong like bull. So that's a review of the free access information that we give out. We don't even charge you for this. Sign up for a 30-day trial. Boom, there you go. And frankly speaking, there is so much value just off of this. It's ridiculous. So I think I'm going to leave the video at that. Got to head off to the boy. So I hope you guys got some good value out of that. Interesting how I was able to try and talk myself out of that horribly depressive state. My strongest suggestion to you is do not get into working relationships with the government, because 9 times out of 10, they're going to screw you over. It is what it is. I suppose if maybe we can get 1 million signups on the site, maybe I can fund Liam's healthcare privately. So wish me all luck. I guess that's got to be my big objective here. We are going to try in September go and have a bit of fun in Portugal. I've got a little bit of money that I would like to try and put to work to try and help this TRI concept going. And so we're going to put that to work in buying like a little house or something in Portugal because it's crypto friendly. It's in Europe, and I think a lot of people could use a place to crash in Europe because it's just as insane there. It's outside of Canada, which I think would be a really good idea. And I don't know. Wish me luck with Liam. I don't know what the heck's going to happen. I don't know what our future is, but I'll tell you, I am very concerned. And it might mean that I have to go through a period of being separated from my son for a while, which, of course, is going to break my heart, but this kind of shit happens in life. It's just the way it goes. Just in case you don't know, Liam is low functioning. He has severe autism. He requires one-on-one support 24/7. So his annual care bill is very, very expensive. So there's a reason why he is in care. And unfortunately, I mean, you see what these banksters and our stupid, substitute drama teachers doing to our country. The worst part about it is there is no funding for healthcare. So what are the healthcare people supposed to do for Liam? I mean, what do you do? They've jacked, stupid fucking Chinese speculators have jacked the price of houses up to the point, where there's speculative investments here in Vancouver. But what are the people who are supposed to live here? What are they supposed to do? Oh, who gives a fuck about them? Maybe, you know what? If you're having problems, well, maybe go take a trip down to Costa Rica. Maybe that's a good place to forget about your woes for a while. Well, what are you supposed to do if you require one-on-one medical support and really you're low functioning? You can't speak, you can't demand your own fair treatment. What are you supposed to do? Yeah, fuck them. If the kid's got to live in a dungeon basement because the housing is just stupidly expensive here, and now there isn't even any hospitals or government, agencies or institutions for people with disabilities to go and at least be protected. Yeah, too bad. So it's a terrible situation I'm in right now. Anyway, it's not your problem. We'll figure it out. PMA for the win. I really hope that I've made at least a small impact on all of your lives today. If you'd like to try and build a small business of trading and approach your trading and your education from a professional perspective, I think our course program is second to none. I think the site tools now give you enough edge that I think it's justifiable for the site subscription. And I think our community and the way that we work together, you just simply won't find another community like this. So put all the pieces together. Maybe what's happening now with government is exactly supposed to happen right now. And this is our catalyst now that all these pieces are together, that TRI takes it to the next level. And indeed, I can fund Liam's healthcare privately. I don't know. Fingers crossed. We'll take one day at a time. PMA for the win. Thank you, everybody at TRI, for the wonderful support that you are in your own individual ways. My promise, of course, is to try and just keep being there for all of you. Try and be the demonstrator of best practices. And I don't give a shit about gold stakes, but at the same time, too, I really want you all to succeed, and I want to help you at the absolute lowest price point possible so that, you don't feel like you're being taken advantage of. All right, so wish Liam and I good luck on the road today. So thank you very much. I see all those best wishes. PMA for the win. All the best. All the best. And the only thing left for me to say at this point is bye for now.